Of course, we are mindful of what's happening elsewhere, what the dangers could be, but we have to make sure that at home we take all the necessary measures to protect and preserve our currency. And in that respect, we are very decisively focused on developing the digital euro and doing everything that we can to be on time and prepared to make this digital form of sovereign money available in the shortest possible time.
There's a big debate happening right now in politics and around the world. Should money itself go digital, fully digital? And if it does, who should control it? The government, private companies, or no one at all? Two big players in this conversation, if you haven't heard, are the Central Bank Digital Currencies, or CBDCs, and stablecoins like USDC or Tether. They sound similar because both are digital and tied to fiat money. That's traditional government issued currency like the US dollar. But how they're issued and controlled is totally different. And understanding that difference matters for anyone paying attention to the future of money. Number one, what are they? First, the basics. Let's talk about the basics. A CBDC is a digital version of a nation's currency issued directly by its central bank. Think the Federal Reserve's dollar, the European Central Bank's euro, or China's digital yuan. It's legal tender and it carries the full faith and credit of the government behind it. A stablecoin, on the other hand, is created by private companies. USDC is managed by Circle, USDT by Tether. These tokens are pegged to the dollar and reserved by holding an equivalent amount of dollars or other liquid assets, but they live on public blockchains like Ethereum or Solana, and they're mostly used for payments and crypto trading. Now let's talk about the differences. Both aim for stability, but the key difference comes down to who's in control and why they exist. The issuers, government versus private companies. The purpose, public policy goals, which is CBDCs, like modernizing payments or fighting financial crime, versus cross-border payments and DeFi, that's stablecoins. Control, CBDCs can be fully programmable by the state. Stablecoins, while also centralized, are run by corporations. Transparency, stablecoins typically use public ledgers, offering a degree of transparency. CBDCs, however, may use permission ledgers with greater government oversight. Listen, make the decisions. Now let's talk about corporate versus government control. Now some people assume that stablecoins are free market money, but that's not entirely true. Circle, the company behind USDC, is backed by major institutions like BlackRock and Fidelity. So while it's not government money, it's very much tied to big business and subject to regulation. That centralization means Circle can freeze funds, and they have. For example, when required by law enforcement or sanctions, when required by law. CBDCs, meanwhile, centralized power is at the state level. They're designed to help governments modernize payments, fight financial crime, and maintain monetary sovereignty. But critics worry they could also allow things like spending limits, tracking every transaction, or even expiring money. In the US, this debate is playing out in the Genius Act and is shaping how private stablecoins are regulated, requiring the one-to-one reserves, the public disclosures, while the anti-CBDC Act is trying to stop a government-issued digital dollar. But some argue even if we ban CBDCs, we could end up with a CBDC proxy, which is a private stablecoin operating under tight government control that essentially functions similarly to a government-controlled digital currency. It's a lot. Play it back over if you didn't understand it. See, globally, other countries are moving fast. China's digital yuan is already in pilot, and the European Union is pushing for a digital euro.
And cash will always be there, and banks will be part of the game and will be intermediary in the process. But our duty is to make sure that as Europeans' preferences evolve over the course of time, the digital euro is a possible reality.
This isn't theoretical, it's actually happening. So here's my big question to y'all. If money is going fully digital, which model serves the public better? A government-backed CBDC, a privately issued stablecoin, or something more decentralized altogether? Because whichever way it goes, this shift could redefine what we mean by money itself. I'd love to hear what you think. Drop your thoughts in the comments, y'all. And if you want more breakdowns like this, make sure you subscribe. It's your boy. Catch y'all on the next one.